So look, I'm going to start off with, just talking about this sort of pre and post COVID world. Maybe this idea of having a sort of a more adversarial to a more collaborative approach to partnerships, and tell me how, from your perspectives, and I sort of open this up as a way of sort of introducing each of you, how the bank and the non-bank sector and their relationships have evolved. And I'm going to throw that to start off with Russia. How have sort of relationships between fintechs and non-banks and the banking sector evolved from your perspective?
So what we saw from pre-COVID to post-COVID, is most certainly a definitive change in the scale of the demand for digitization and re-platforming and meeting customer demands that have, sort of really permanently evolved in the direction of delivery of products that are, digitized, as well as real-time, strong value propositions, strong customer experiences, and really, all in all, enabling even the banks themselves to deliver these products and these experiences and these value propositions and this full integrated experience really to their clients and customers, and enable their staff to deliver it wherever the staff may be, whether they're working from home or they're coming into the branches. And so, to be able to deliver product in real time, you need processes all around it that are also in real time. And the banking sector is not really famous for that, neither in Canada nor in the US nor globally. More than 80% of processes in general, and I'm not exaggerating, are still manual. So huge lift there. So from RIM's perspective, we are really a platform as a service, and we partner with financial institutions really of all sizes, as well as fintechs and large brands, in order to, in an embedded fashion, roll out our platform that enables them to deliver products and services to their end customers, be them consumers or businesses or commercial, as well as enable their staff to effectively run and deliver the business. So again, ensuring that entire real-time, front to end, front to back, as well as the seamlessness and then automation of these manual processes. So actually, interesting to say it that way, but we've been on an extremely, accelerated path since COVID, Gary. Today with Deloitte Fast 50, Recognition, Communitech, Team True North, et cetera, and really great partners from Canadian Western Bank, which was really our first partners in the Canadian ecosystem, to Laurentian Bank, to a few credit unions that we're going to be announcing pretty soon, in this quarter, as well as we launched Air France KLM, so global brands working with fintechs, and having some announcements as well in the US pretty soon. So that's in a nutshell.
So, and obviously digitization is a theme that's bandied around, and right through COVID, that's been an accelerator. Amit, just to throw it to you, is that the case? Does the bank sort of see, oh my gosh, digitization has accelerated, maybe we've just been on this track for a while now, and you're looking for partners to help you with that? Internally, do you find that you don't have the capability to accelerate that digitized bear hug, with the customer? How are things with RBC?
Thanks, Gary, for this question. I would say it's good to be able to toggle a physical mic versus a virtual mic the last couple of years. So thanks for having me, and thanks everybody for joining us as well. So I would say, I've always believed that the banks are the original fintechs. We are the ones which set up credit cards, ATMs, contactless payments, and what have you. But we have always worked with with other technology companies across the space to partner to make sure that we are delivering the product and services that our clients need. The thing that has also evolved, and frankly, what keeps me up at night is big tech, right? There are these big technology companies, call them, the Apples, the Facebooks of the world, and as they enter financial services, they do represent a pretty big, threat to us. And absolutely, the only way to win in that battle then is to make sure that we are partnering with, with all like-minded firms which share our values, that we need to create product and services that meet the needs of our clients, and make sure that that we are first to market with those products. So speed is of essence to us, and that is something which has evolved as we have come out of this post-COVID environment, and we welcome those those opportunities to partner and grow together.
Okay, so Andrew, so what do banks not understand then about the fintech domain that obviously you've built your business around? What do they not understand about you, and what do you not understand about them? I feel like I'm in a bit of a therapy session. Is there a barrier? Is that a barrier? Is that an opportunity for you? How do you look at that?
Yeah, no, I don't think there is anything major there, but let me let Andrew go first.
Yeah.
So yeah, that does sound like a therapy session. We should be having couples therapy here between fintechs and banks. No, look, I mean, I think if that was ever true, I think it's much less true now. Just like we've heard from Amit and from Rasha, like there's so much opportunity for collaboration, and if anyone, whether at a fintech or a bank, like thinks they can do it all, like that's just not a recipe for success anymore. Like I don't think smart people think that way. If they ever did, they certainly don't think that way anymore. We certainly see ourselves as an ecosystem player. So from a consumer-facing perspective, we help people understand and improve their credit. But from an ecosystem perspective, we connect lenders with appropriate consumers. We improve. We're an on-ramp for consumers into the world of credit data. We're increasingly a source of credit data that's available to the credit bureaus, et cetera. So, we see a complex ecosystem where we can fill an important niche, and in our case, play an important sort of customer-facing role. And I think that's how most people think of life now. It's an ecosystem. I mean, I'm sure we're not going to hear from anyone on the panel today saying, "Look, we got this. We don't need anyone's help ever."
Yeah, and in all fairness, we are simplifying things. Even just to talk about, church and state, banks versus non-banks is a huge oversimplification of the ecosystem. So, point taken then there. Mark, AI, huge buzzword, right? Everybody a huge buzz initialism. There's a lot of people, especially in the non-banks sector, command domain expertise there. We hear about it a lot. When you as a company are partnering, when you are going out there and working with banks and other partners in the ecosystem, how do you treat I know that's a big core piece of your business. When you walk through the door, how does that dialogue go with a bank, with financial institution?
Thanks, Gary. I think it's a very timely question, particularly as we kind of come into this, out of COVID into this what's going to be, I think, a very challenging 6-12 months at least. Having a better toolkit, a better ability to make decisions, and being able to link funding, importantly, to stand behind that kind of enhanced decisioning, I think is a real differentiator. So, look, AI has become a buzzword. We all want to have an affiliation with whatever is perceived to be the leading technology that's available. But as you know, building the right machine learning and linking it to state-of-the-art computer engineering is not trivial. It's an expensive process, and it requires constant investment and constant attention to keep it at the leading edge where it really needs to be effective. So I think eventually, the world is going to differentiate into the haves and the have-nots, people who have access to or their own AI, their own machine learning, their own computer platform that allows them to link to the consumer and to the institution and make the best possible decision. It's consumer lending, whether direct or indirect, whether secured or unsecured, is extremely well set up to take advantage of machine learning and the engineering that can drive it. And I can't imagine that 5, 7, 10 years from now, we're not all going to look back and say, that was definitely a better toolkit. And I think the challenge that the market's about to present is going to really make that very, very clear. How you get it, how you build it, how you create it, how you then, as you're asking, how you bring it to the market is an important question. We are doing it by leading with our capital. My belief is that selling it as a service, while valuable, is not as powerful as saying, look, we'll buy loans, we'll fund you, we'll stand behind quietly. We're not trying to own the customer. We're a B2B platform. You do the origination, you do the servicing, that's what you're good at. You build relationships with your customers, your clients, you face the market. We're here happy to provide as much capital as possible based on our platform.
Right. So half of your business is the business of decisioning, and the other half is then providing capital to that
Funding.
decisioning. Yeah. And AI, is a great, is basically a term that sits on top of voluminous data, right? So you're only as good as the data you have. So the last panel, touched on open banking, open data, open finance, open. How do you find that works when you have to come into relationships and I presume you have to share data? Is that a barrier? To the way that you start your business, to the way you decision, and then how you allocate capital on top of that?
I think it's just a question of how you present it, Gary, and how you make the opportunity available. I think if people think you're sort of just there to take their data, that's going to be challenging. I think when it's a two-way street and you say, look, I'll work with your data, I'll show you what the outcome can be, let me have half, then give me the other half, and I'll show you what the decisions could have been. And I think that can be very powerful, and that's sort of, that differentiation for people who are facing credit risk issues. We've had this vision, I think, that the change in the market over the last 9 months across the fintech space has been very illuminating in the lending space, where people have wanted to say, oh, I don't have a balance sheet. I provide technology. And it's clear now when you look at what's happening in the market that the market sees that credit risk is an issue. And so I think having, not to overly repeat, the right tools that you've built that say, look, I understand I'm in the credit business. I know I'm in the risk business. This is what I'm doing to differentiate my business. I think that's going to be where the future lies. So
you tiptoe into the relationship with sort of like A/B testing. You prove that you can do something, and then through that proof, then you build trust. You then can go and
100%.
Yeah. So going back to you, Russia, let's get into storytelling. So you've established a relationship with a number of banks. Adam's sitting there absentee, but Laurentian is one of them. Right? So maybe if you don't mind, could you walk me through that relationship? How did you establish a relationship? Were there any business epiphanies, surprises, things that our audience would want to hear when they're knocking on a institution's door and wants to establish a relationship?
Yeah, that's a great question. So I think, from a fintech perspective, working with FIs, I think it's sort of the ultimate test. Because in order to verify and meet all of their regulatory requirements, all of their security requirements, all of their audit requirements, and then a very complex ecosystem that is the financial institutions. From Brim's seat, we re-platform all of the workflows. So you're really embedded with the entire workflow, from their branches to their digital banking channels, to their agent call centers, to their customer and engagement platforms and marketing, to their credit and risk compliance platforms, where we're making sure that all of the products that are basically now offered to the customers are coming in exactly as per the requirement and the needs and, and the risk profiles and tolerances of your partners, and how they want to manage that risk, and providing them the tools, again, to run the business as well as to offer the products. So you need to come prepared, that you're not going to have two takes at this. You're going to need to have everything that they require end to end, so no gaps, live. And so if you do have gaps, you basically just sunk quite a bit of time in this relationship and this pitch and et cetera, and you're going to get disqualified because they cannot turn off their existing processes and turn off their existing providers. So for example, Brim, when we come in, we've replaced 7 large providers to Laurentian Bank and automated 80% of the manual processes. Well, if you're not going to be able to enable them to do every single aspect of what they used to rely on the old providers to do, you're going to be disqualified. And they're not going to be able to economically run 2 ecosystems, run your platform and your services and your products, and as well keep their legacy providers. So it's going to be a turn off. And if you're going to turn off, it means you have to have no gaps, which is why I go back to saying it is the ultimate test. So it is important, though, from a scaling perspective and from B2B, so Brim, B2B with our partners, to really understand that and make sure that we are ready, before saying that we are and before putting our hands up. So we took this approach, Brim, of being sort of under the radar for a few years, as you know, building our entire platform, building our entire ecosystem, and testing it within ourselves, really. That continues to be our innovation lab. Brim's products are really our innovation lab. This is where all of our new innovation, all of our new products, this is where our finger is really on the pulse of the user. And then we're delivering this platform into the ecosystem of our partners.
So obviously, you built a solution, and I'm sure that in your labs you built an amazing solution. But when you then knock on the door of a bank, and you've got, as you say, this Gantt chart or this work-back schedule where they have existing processes, and at some point you're integrating, and then there's a switch off. How do you manage that, and how long did that take? Like,
Yes.
what was the work-back schedule there? Because I've heard that banks are not the fastest in the world. So how long did that take?
I think it takes 2 to tango, in anything, right? In any problem. So recognizing that, we actually roll out with our bank financial institution partners in way less than a year. Our products was in market and with their employees, in July. We're doing, a full rollout right now with Laurentian Bank, and that entire migration has already happened that you're talking about. We're way within 12 months, way within.
So when you say 2 to tango, it means if there's motivation on their side, things get done faster. But there's still, a bank is just, again, you tell me.
Absolutely.
Yeah.
So 100%, if you have the organization and the will of the organization behind it, I think this, is critical to make it fail or succeed. But, if we go back to the brass tacks, how do we actually do it? If we were to rely on our partners to resurface, if you will, all of our, technology within their ecosystem, i.e., they're going to have to resurface it within their existing technology that is dated in a lot of instances. Actually, that is really most instances.
Legacy.
Yeah. It's not going to happen. So the way we've taken the approach at Brim is really from a technology solution we differentiate ourselves. So we roll out our platform into the ecosystem of our partners, both on the consumer side, fully embedded in their URLs, in their emails, in their voice, seamless, there's no disruption from a consumer perspective, as well as from their employees' perspective. So on their intranet, on the permissioning of the employees, they have the ability to, to manage as they do all of this type of, levels of permissioning and keystroke audit, and et cetera. But it is Brim's platform that is rolled out in their ecosystem. We're not asking them to ingest our technologies via APIs or anything else and then resurface it through their legacy system, which that, for sure, is at least a 3-year project. And so then you think about ledgers and financial statements. And how are we going to make sure that at the end of every day, they close their books? And at the end of every day, they balance from a funding perspective and whatnot. So that's a huge lift. And so what we've built is the ability to immediately, based on their own formats and, and structure of data in reality and structure of ledger, feed directly into their ledgers and into their data in the format that they are used to receiving. So again, the onus is now on Brim to deliver directly into their financial statements. So they close their books, they balance, we have financial statements that, exactly. Got it.
So, Andrew, so you've worked with Borrowell, with banks in a variety of ways over the years. And could you walk me through your journey? Like, were there any, aha moments, lessons that you can share with Borrowell, with Refresh, any of your touch points, that you've then worked on to roll out with financial institutions like banks?
I was just reflecting that we've talked about marriage counseling and we've talked about two to tango. I mean, this panel isn't about David and Goliath. This is a love story, right? We gotta.
Or a breakup. I'm not quite sure.
Right. Well, we could discuss that. It's the odd couple, right?
Yeah.
But I think there actually is a lot that's apt about that analogy and how you successfully work with an institution that's much bigger than you. I'm reminded of, was it Pierre Trudeau's line about being in bed with an elephant? If you're a mouse in bed with an elephant, you can't help but feel every twitch and movement. And I think that's an apt analogy in some ways. Over the course of our history, we've had many different kinds of relationships with banks, from funders when we were lending to a very close partnership with CIBC when we were powering some of their lending technology, to today when we have relationships with essentially all the major banks in Canada and many companies in this room. And you've got to find the right approach for the right size. It's obvious. I mean, this may sound obvious. It's a lot harder if you want to be deeply embedded in a bank's process and having access to their data. That's a much harder lift than if you want to do something that's lighter, like maybe you want to be a chatbot that on their website that doesn't have any access to data. So there's scale appropriateness, and if your solution requires that you're embedded within like the core banking infrastructure and with carte blanche access, that's just going to be a harder lift. Like that's a harder model. It's great if you can execute as well as Russia has, because then you're embedded. But like those are just harder conversations to start.
Got it. So, Amit, you've had a number of partnerships in the market. I know one that is interesting for me, just because you are the chair of our BNPL roundtable, and thank you very much for that and your leadership there. You've partnered with Data Alliance's Bread platform, and so the question is, how does the bank look actively to build versus borrow? And I know in most cases it's to look to partner. What's your criteria? How do you go out there? How do you establish those relationships? Because you're proactively probably doing that.
I think that's a great question. So there are, I would say, three things that that we usually look for. The first is something which is a scalable platform, and this is an area where unfortunately our scale works against us. If something solves a problem for 500 people, it doesn't do anything for a bank of our size. So it has to be something that solves a big problem. So it's less about what's the probability of success. It's more about if we succeed, what kind of an impact can we have. So that's the first piece that we look for. The second piece we look for is speed to market. So a lot of places where we have collaborated, we have had that realization that yes, build is an option, but that might take quite some time for a variety of reasons. So speed is really important. The third piece is, we really love to partner with folks who've had prior experience doing the same thing. So Borrowell, great example, used to do direct-to-consumer lending. Same with Mark, we've been having conversations more because we do recognize that, Mark has experience doing what he's asking us to, recommending us to do as well. So the same pieces were areas that were critical for us as we were building our buy now, pay later strategy. Alliance Data had a scalable platform. Speed to market, of course, they had a product which was ready. It was already deployed in a different market. And yeah, last but not the least, we didn't know what we didn't know. For example, buy now, pay later. How do we make sure that there is not massive fraud over there? And that's something that we gained by having this partnership, that we could deploy fraud rules which were customized for this channel, and that was immensely beneficial to us. So those were the three criteria that we were looking into as we did our build versus partner kind of a decision. And what I would say, if I were to look back, one of the reasons this partnership has been immensely successful is not just because of these three reasons, but also we realized that our values match. Both the organizations are very, very focused towards solving a critical client need. We're not trying to just make sure that we have a business out there which makes more money. We are really, really, we're really missionaries. We're really focused on making sure that we are solving for the client need first.
Got it. So, Mark, look, you similar, I presume, to Russia, have this, embedded relationship. There's this very intricate tango that you have to go through, to work with partners. As a fintech, what kind of timeline do you look at on integration? Because I know that, for a number of companies, both in the audience and on stage, time is not a friend, right? You're building up a technology-based company. When you look at a partnership that possibly is going to take 2 to 3 years to integrate, to get to market. Do you account for that in your business plan? Do you go out and understand that you're really not going to go to market with a number of large institutions for a lengthy period of time? You've got to do this A/B testing with data. You've got to prove that you've got to go through all the steps with the bank, to do your due diligence, or for them to do their due diligence. Is that an encumbrance, or you just build that into the way that you go to market?
I think there's different go-to-market strategies, and it's easy to talk about it in kind of one way. I think, Russia has the heaviest lift in a certain way because, first of all, she has a B2B platform, and she also ultimately has to deliver a consumer-facing platform at the same time. And, kudos to her with everything she's been able to accomplish so far with that. When we think about the market, we think about non-banks and funding non-banks, and that has one timeline. Working with banks has a different timeline. And, I think, FTX shows you, it's easy to sort of pile on about the banks, the way people used to pile on 20 years ago about the telcos, right? When mobile was the only solution available, telcos are going the way of the dodo, right? I mean, protecting $1 trillion worth of capital and a $150 billion market cap is non-trivial in terms of the kind of what you have to do to make it happen. So it's understandable that when they bring someone in to deliver a service that's going to be critical and of the scale that makes a difference, that moves the needle for them, that takes time. And if you want to be in that game, I think you have to have the capital and this, the ability to sustain your operation for the kind of time it will take them to bring you into their business. Of course, the rewards, it can be very sticky business, and the rewards can be tremendous. But if you don't have the staying power, you're not going to be able to do it, right? And the bar to get over, as everyone on this panel knows, to do business with a bank because of the regulated nature of the institution and keeping all that capital safe is high. And then there's also, I think, this third trend. Retailing and finance are converging. If they haven't already converged, right? And so this whole embedded lending product, where someone says, "Look, I'm delivering you a better way to buy a car. I'm delivering you a better way to do something online." Suddenly, everyone turns around and they go, "Well, but hang on. When it comes to financing that, yeah, am I really delivering a better solution?" And I think that has its own timeline. Developing an installment lending program is also a non-trivial activity that takes time, whether it's car or furniture or mobile phones or whatever. So I think, Gary, the timelines are different. But of course, if you can't walk the walk, you're not going to get there, to use a trite old phrase. But since we're sort of focused on the whole, trite phrase here, I thought I'd throw one in for good measure. Good.
So we've got a few minutes before we get to the schmooze, which I know you all want to get to. I was just thinking that this title that whimsically put in, David and Goliath, and I was thinking, well, who in this relationship is David and who in this relationship is Goliath? Maybe in closing, we can talk about, if you create this relationship and it's a long-term relationship, ultimately, who is benefiting, or is it just this, again, going back to relationships, this fluid relationship where one is contributing, from one side and the other from another side, and God bless you, you're going to have a long and fruitful, journey. But are there Davids and are there Goliaths in this relationship? Do you find, Rasha?
Yeah. Thank you for that. I actually want to go back to, the ease of and speed of going to market and how long it takes. And going from, Brim's perspective, we started with one client to 8 to 15, literally in less than 18 months, rolled out and in market. And that actually goes, against the thread that really underlies all of this conversation. So we've been able to speed to market. So this is 3 months to 4 months, even with a massive conversion of existing portfolios from existing legacy clients well within 12 months. And we see it from our business, as I said, again, going from 1 to 15 in less than 18 months and going through different markets and going through 4 verticals. The key is that you have to be prepared and your product needs to be ready because you can't be iterating, and that is what wastes the most time. Then you have to have a very thoughtful approach to your go-to-market. So basically, you have to identify the right partners, and you have to identify the partners that respect their time and yours. Super important. And then you need to have a technology that doesn't rely on the technology groups of your partners to actually lift it with you. So your technology really can hold both ends, and then magically roll it out in the ecosystem of your partners and then enable them to operate. When you do that and when you get, I think, to this panacea in being able to operate, you have a very robust business model and a business model that is sticky. So you're going there and you've replaced 5, 6, 7 vendors. You're now their internal and external platforms. These are, basically contracts that are at least 5 years, exclusive, non-competitive, non-breakable, and in general, they repeat and renew because who wants to tear this whole thing out and put it back in? So you're building a business that is real, that's sustainable, there's no churn. So obviously, everything that you're doing is cumulative up. So your hockey stick is resilient. So this hockey stick is not at risk of falling down because of churn and, fads coming in and out of market. So I think it's super important to have extreme, confidence and be convinced that the product that and the platform, whatever the service that you're offering, solves a real problem for the end user and for your client. And then you can deliver it in a very efficient, time-sensitive way. And then in order to be able to get them speed to market and speed to business and speed to your client, being able to start, reaping the economic advantage of rolling this out.
Right.
So we are all under time pressure, whether it's the Davids and the Goliath.
Right.
So that entire speed to market is extremely important.
Well, and maybe to that end, maybe the bank and the the technology provider are the Davids, and the incumbent legacy stuff is the Goliath that you're slaying, right?
Yeah. So the incumbent legacy is, I think, they're operating on borrowed time.
Yeah.
I think they know it. We know it. Everyone does.
Right.
But I think in the relationship between fintechs and banks that are working constructively together,
right,
it's really much more a relationship of equals.
Right.
And going back to this therapy session, I don't think anything works if it's not a relationship of equals.
Got it.
Yeah.
Got it. So two Davids at the table. Listen, in closing, whether you want to throw in, marriage counseling, relationships, or anything. Just a few thoughts on, what we should take away from, your experience, because you've been working at this, Andrew and Amit and Mark for years. Just a few, just one thought to leave us with as we close the panel.
Look, I think this really is an ecosystem, and if you're trying to build a business, how can you help make the ecosystem better? How can you fill a gap in the ecosystem and be useful to other players in it? Financial services is very hard to come in and disrupt and drive the existing customers out of business. It's just, we really haven't seen that anywhere in the world, and I don't think we're likely to see it, especially in Canada where we have such a deeply embedded incumbents. I guess I would say, if I were at a big incumbent, there probably is some value in actually thinking of the David and Goliath analogy. I think Andy Grove at Intel, the great Intel boss, said only the paranoid survive. I think if you're an incumbent, a bit of paranoia is probably healthy, whether it's about fintechs or whether it's about established tech companies. So no one at a big bank is asking me for my advice, but I'll just offer that unsolicited.
Amit.
No, I think I agree with Andrew. It's one of the best things one of my mentors told me early in my career was that everybody wants to do big things. True success comes from doing small things greatly. So let's figure out what all are those the small things which collectively solve the client needs, and let's make sure that together we build the best possible mousetrap for it. That will be my aspiration for sure.
Okay. Closing marks.
I try to think 10 years from now when we look back at today, hopefully we'll all still be together. And, when you think about where will financial services be 10 years from now, I think it'll be about delivering a better customer experience in a safer, credit risk-oriented way. And probably because more and more people have focused on what they're good at. Is it customer-facing? Is it on a more B2B basis, delivering a particular thing? At Fionic, we're very focused on delivering a best-in-class decisioning married to a best-in-class computer engineering platform, with capital. That's what we're about. That's what we're going to focus on. And I think over time, you're going to see more and more people delivering a very specific thing to financial services that will ultimately change the face of where we are when we look back.
Thank you very much. Great closing remark, Mark. Thank you, panel. We're free to go and take a break and grab a coffee and schmooze. Thank you very much.